there's no doubt that growth in the UK economy has slowed a bit this year, and there's two reasons for that. First of all, exports have been a bit weaker because of emerging markets in the main, and also investment spending has been a bit weaker, and I think that's really because of uncertainty about the Brexit vote. In terms of what companies in specific sectors are saying, well, yes, companies like house builders and property have been affected a bit by the Brexit uncertainty. Other stocks, for example, in food retail, are being impacted by the ongoing price competition from the discounters like Aldi and Lidl. In terms of other sectors, banks, obviously there's still ongoing concern about regulation and possible conduct costs. But overall, I think relative to other asset classes, the UK economy should still see good growth this year, with the main uncertainty being what happens in the Brexit vote. We'd expect dividend growth this year in the UK to be about 4 or 5%, which would be similar to what it was last year. Interestingly, pre the financial crisis, dividends used to grow about 10%, but at the moment, what we're seeing is some dividend cuts across the market, and that's mainly been due to financials and resources, and in particular, the mining sector. However, saying that, the UK still has a dividend yield of about 4%, which I think is very attractive relative to other markets, and in fact, 3/4 of stocks in the all-share now yield more than gilts. I think in the current low interest rate and low inflation environment, equity income funds still have a very important role to play. At the moment, the UK market's yielding 4%. Income funds are tending to yield about 10% more than that. So you get a very good yield and also exposure to dividend growth and capital growth in the market as well. And also there's lots of evidence that over time, focusing on high yielding stocks, and in particular stocks with above average dividend growth, should perform better. So I think that's why income funds will remain an important part of a client's portfolio. I think the key thing that differentiates Standard Life Investments from the competition would be our process. We have a very well-defined investment process called Focus on Change, which isn't value, it's not growth. Both these styles have their merits and work at different parts of the economic cycle. But we believe to try and outperform consistently, you need to do something slightly different. And Focus on Change is about identifying potential new information and then analysing how it could potentially impact companies' earnings or dividend forecasts.